Okay, happy Sunday, everybody. This is Uncle P, and I'm going to show you a technique that you can use if you are working 40 hours or traveling a lot and you just don't have time to sit in front of the charts to analyze. Many of you do work during the week, but you have your weekends off. So what I want to give you some advice to do is to actually do your analysis on Sunday, Saturday, or Sunday, to do an analysis to kind of look and see, look for some opportunities that you can possibly take advantage of in the markets. So for an example, and I want to go over a couple of things to make sure we're covering everything. So one of the things that a lot of professional traders do is they actually like trading off the daily time frame. Okay. And I'm not saying that you have to do that, but I'm just going to show you something that may help you with your trading. Okay. So the daily time frame is very helpful for people who don't have time to do an analysis. All right. So watch as we go along. Okay. The other thing to keep in mind is the daily time frame, and oftentimes is a lot more safer to trade off of because it absorbs news events pretty well, soaks them in, and then it keeps on going without actually breaking the trend. Okay. That's one thing. What we're going to be doing on the daily time frame is looking for support and resistance. That's where these dots come in. They're based off of support, meaning the price can't break below a certain level. As you can see here, no matter how many times it came around, it danced around, but it never went below this level right here. And then resistance is an area, and I'll pull this over so you guys can see it. Well, actually, you can see it. I forgot I got both screens going. You can see the resistance right up here where it tried to poke above, tried to poke, couldn't do it, and then ultimately it collapsed. Same thing here. It kept on trying to break below, kept on breaking below. And this is a number of days, of course. We'll talk about that momentarily. But the point is this is a level of support, meaning that this is the lowest it went. This is the highest it went before it dropped. This is the lowest it went before ultimately it fired up for hundreds of pips. Okay. All right. So, it's much safer. So there's a lot of news events that took place in this situation, but nevertheless, it still went in the direction it was going to go. Okay. So real simple, what you can do. Let's just take a look at this pair for an example. This is the Euro GBP. You don't have to have the triple arrows in place and all that stuff either, by the way. You're just looking for areas where price had gotten stuck. See all these candles stuck in this area on this trend line right here? Okay, you do have a confirmation with the big arrow. You have the trend line right here, which is a second confirmation. You do have your resistance and resistance dots, the yellow ones or the reds. It's sitting up here. The bottom line is it's stuck right here. It's trying to break above, but it can't. So what you can do is use this as an example, drop down to the 1 hour and take a look and see what's going on. And as you can see, this is where it got stuck. It came down and it came right back up into this area again. Okay. So do we have the triple arrows yet? No. You can drop down to the 30-minute as well and see if you see anything. And again, as you can see, price is just going around in this little sideways motion. You can also check the 4 hour and you'll see 4 hours is right there on the triple arrows. You have a easy Stairmaster. So you can easily do Stairmasters off the 4 hour charts for people who don't have time. But you can also just take a quick look at the daily and see if you can drop down to the 1 hour for entry. So this one here, you would have to do a Stairmaster off of, but I'm just simply showing you, first of all, how you can check on the daily time frame and see how price is stuck in this area. And that means that, yeah, you may have to hold it for several days, but that's okay because guess what? You're working. You don't have time to look at charts, but pretty much, you know, okay, this is an area where there's possibly a situation where it won't continue to go up. I can place a trade, may have to hold it for a few days, but the good news is, guess what? I don't have to sit there watching it. So let's go through these. So here's what I would do on Sundays. Okay. Because I'm going on vacation again in about 2 weeks. So for a vacation trade, I'll just start doing this. Just dragging and dropping. Just dragging and dropping. Looking for opportunities. Just dragging. Okay. Just dragging. Okay. Looking. I don't see any arrows or anything, but look, watch this for an example. You see this? See how these dots are right here? Price can pull down. Drop to the 1 hour. Let's see what's going on. Okay. All right. All right. So this one is raggedy. So we say no. Keep it moving. All right. Keep going. See if we can find some quality. Okay. All right. I see this is supposed to be an uptrend. It pulled back. It's sitting right here on the daily. Drop to the 1 hour. Let's see what's happening on this one. All right. And there we go. We see it. I see it's a Stairmaster off the 1 hour. See? And this is the Let's refresh the screen. That's the Swiss JPY. So what I would be doing, I would be going through these, and I'll do a Swiss JPY. Just for an example, I see that the daily is directing. It's saying that it should be going up. The 1 hour is also. It's basically, guess what, doing an annihilator strategy on the higher time frames. That's all it really is. But because it's such a higher time frame, you know it can go in that same direction for days at a time. So I'll write this one down. I just jot it down. Will I take a trade? No, I'm doing it right now when I'm not emotional. The markets aren't open. There's nothing for me to be worried about. Okay, there's the daily. Drop down to the 1 hour. And see what happened on this one. Boom, there it was. See how that worked out perfect? For a massive drop for pips. And that ran for, what, since June 18th all the way till right here where it made its reversal, which was July 4th. Same exact direction. But this is what you're looking for. See these? Resistance. Price is stuck in this area. And eventually, yeah, you had to wait a few days, maybe a week. But boom, this thing dropped for hundreds of pips. One trade. So boom, if you got in there to here, that was 442 pips. One trade. One trade. It was worth the wait. So let's just keep looking. Okay, let's keep shopping. That's not one, but just showing you an example of what happened on that one. Okay, let's keep shopping around, keep looking. Because again, truth be told, you only need, guess what? You only need 1 or 2 good trades, maybe 3 if you see them. Okay. All right. Here's price is stuck right here. We don't need the triple arrows on here. We're just looking for areas of stuckness. All right, let's see. Let's check that one out. Sitting on price. All right, and there's the triple arrows right there. So it's a possibility. I don't like the flat ones. You know what I mean? I don't like the flats, but I see way back here it's supposed to be in that. Came up, hit there. It's coming back to this area where support was. Look, price came down, literally was falling down, touched. Did a gentle touch and came back up. So this is established a support area. See it touched again right here. So touched again, touched again, touched again. So now it's stuck. So this may be an area. So what do? We write it down. And the reason why we're doing all this on a Sunday or a Saturday is because the markets are not open. So you're not emotional. You're not feeling some kind of way. You're just doing a quick analysis and you're just dragging and dropping, making little notes. Okay, so right here, here's another one. Price is bouncing off this trend line. Dots are right here. You see the little yellow dot? Big arrows right here. Drop down to the 1 hour. Let's see what's going on. Wow. Look at there. You see how this is Stairmastering? I'm sorry, now later. Stairmastering, I'm sorry, mixing them. It's Stairmastering off the daily. And the reason why is because, again, it allows you to do your assessments when the market is not open. And when you do place your trades, pretty much you're safe because guess what? Look at how tight this is. Okay. Look at how close down here it is to the support. So your stop loss is minimal. Your potential for it to go back up is big. You see that? Big potential, small risk. Okay. All right. So let's keep going. And we're just jotting. We're not taking any trades because why? The market isn't open. And that's the nice part about it. Let's take a look at this one. This is one I took, you know, you can see this 44 pips already. Let's drop down to the 1 hour. Okay. And let me slide it over. This was the entry right here. See, boom. Price came up, came back, touched a little bit, and then it's still going up in that direction. Okay. So with this one, yeah, it's bouncing around, but it'll eventually go up because I'm not watching it all the time. I don't have time to watch it if I'm on vacation. So as you can see, yeah, boom, there we are. 44 pips. Why? Because I see the big arrow. I see support dots right here. Price is bounced off of the area in this area. Okay. And this is the GBP Swiss. Again, you don't want to, I didn't go heavy on this one. Because it's the Swiss and that's an unstable pair right now. So you don't want to go heavy on it. But nevertheless, you can see real easy trade. Okay. Let's go to another one. All right. All right. I see price is sitting at this dot and this GCAD. CAD had a bad time last week. Because of oil and stuff like that. So you drop down to, to the 1 hour. Drop to the 1. Okay, this is not a nice setup, so you move on. Okay. All right. We're still looking, just shopping around. See if we find anything delicious. Okay, I see prices stuck in this area on this one, and that's GJ. All right. And we go to the 1 hour, and we see the same thing. So far, and here's another thing that you're going to find. As you're writing these down, something is going to be screaming at you, screaming as you're writing down your list. I'll share that with you just a moment. Okay. All right. You see this? Okay, price is pulled back on this uptrend. Let's go to 1 hour, see what the story is. Okay, nope, don't like it. Keep it going. All right. So far, we are almost done. Okay, nope, I don't like that. Remember, you only need 1 or 2 trades a week. Okay, you don't need 5 and 6 and 7 of them. You only need 1. See, price is bouncing right there. Drop to the 1 hour. Oh, triple arrows on the UCAT. And it's pulling back, which is good to give you a better entry. Okay, give you a better entry. Price has dropped substantially. So, of course, as I've taught you many times, when price drops substantially, many times it does have to come back up and get a breather. That thing dropped 524 pips, one move, okay? Therefore, yeah, it's about time for it to get a breather. So that will be one I will write down. Okay, USD CAD. Okay, and I'm just making my list, checking it twice, checking to see if it's naughty or nice. All right, this is oil. Let's go to the daily on oil. Okay, oil is pushing up in the reverse. Okay, but we see prices just bouncing right there. So anyway, that's not it. Let's check gold. As you can see, gold collapsed. Let's go to the 1 hour and see what the setup was. It was right there. See how that worked? Off the daily. And then you could have made you some pretty good pips off of that one. One trade off of gold. And some people did actually. 363 on gold, just playing one trade. See, so if you did that one trade, you would have been good. Platinum. All right, let's look. Oh, now look at this beauty. Big arrow. You see the dot right there? Price is bouncing here. It was clustered up in here before. You see that? Clustered here, came down, bounced back up. Boom, stuck right there. I see it. Let's drop to the 1 hour. This is the NASDAQ. So if your broker offers it, oh my, and look at what we see. Oh, isn't that sexy? Oh, that's sexy. Yeah. All right. That's the NASDAQ. All right. And typically the NASDAQ, the Dow, and the S&P follow each other. So let's check and see. All right. Look at there. That's the Dow. Okay. US 30. That's the Dow. Okay. Your broker may have different structures of saying it, but it's the same thing. Let's go to the daily. What do you see? Dot. Sitting right there. Let's take a look. I wish it was off the trend lines. I don't see it bouncing off these trend lines, but nevertheless, we still see it. Checking S&P, same exact thing. Price is stuck right here. See that? S&P. All right. We see this is crossing upwards, meaning the sellers are coming in. Let's drop down to the 1 hour. And what do you see? I told you guys the S&P, the NASDAQ, and Dow typically have the same setup. So you can pick either one of those that fit your flavor. Okay. And then let's take a look at one more on my list. Okay. And look at here. Let's go to the 1 hour. Price is stuck right here on the resistance dots. We have the big arrow. Drop down to the 1 hour. And this is the Aussie 200. Okay, watch this. I'm going to refresh the screen. Aussie 200. And what do you see? From the daily, you see it's hitting on that resistance dots. It did break back out of this trend channel, which many times it'll poke out and then drop right back in. Okay, it does do that. So if you get stopped out, sometimes I'll just wait for it to reset because they try to go for a little more money because they know a lot of sellers are sitting up in this area. So sometimes what they'll do is they'll push the price up, wipe people out, and then they'll resume it and drop it massively. So this will be one that I'll be looking at, and I'll put it on the list because I see triple arrows is right here on the 1 hour. See how you just doing the Stairmaster off the daily? And why? Because it gives you the ability to be able to place your trade. And even if you're working, you got to travel, you're driving trucks, you're on the road for a week, really doesn't matter. You still can be in this trade for quite some time because it's going to take time to play out anyway, because it's off the higher time frame. So again, Stairmaster off the 4 hour would be great. If not, you can also do this method as well off the daily. And I know a trader friend of mine, and he's been trading and make a massive amount of money off of doing pretty much, he don't have our system. He has his own thing, which is a lot more complicated, but literally he trades off the daily and he will hold some trades for days and weeks. And man, that man makes thousands upon thousands of dollars simply doing this. Okay, doing the same exact thing, except for he only does daily only. But I'm showing you how to go even easier where you can check the daily, get in at an earlier price like this here. This is clean and simple, real tight. You see how tight that is? Okay, so your stop loss will be minimized. See, like right here, price came down, but it bounced back up. This is what you want, because you want it to bounce back up to shorten the distance between your stop loss and your entry. Okay. But if this thing drops, Look at how far down this can go. So for an example, let's take a look. Even if it drops back to where it did this last time, okay, that was 834 pips, okay, one trade, okay, one trade. And yes, you would have held this one for quite some time, for maybe 2 or 3 weeks. It doesn't matter, okay, doesn't matter. It's money. And therefore, time is no longer a factor, okay? And like I said, a lot of professional traders, they trade this way anyway. That's why they put large lump sums of money on there, because they're comfortable knowing exactly where the trend is going to be, even with news events baked in. So even if you can't, that's an example, okay? So now we have a list. We looked at, and let's look at one more. Let's see. Let me see. Where are you? Let's take a look at you. Okay, GA. Yeah, we did write it on the list. Okay, so now we have our little list. And so now taking a look at the list, you can clearly see that the Swiss JPY, the Euro JPY, and the German, the Great British Pound, the GBP JPY, all are showing a potential buy. So now you take a look at the news, and we can then go back and say, okay, which one looks the sexiest? Okay. All right, this one is already up this way. Okay, I see that. That's that one. And then you take a look at the next one. Okay, I see this one a little bit lower to the baseline. That's a little bit tighter stop loss if I'm going to do a Stairmaster kind of thing or situation, whatever you want to do. Then you take a look at this one, and this one is freshly bouncing right here. So you can eliminate or figure out which one looks the best, and then scratch out the others, okay? The other thing you can do to help reduce it down, to narrow it down to your best 2 or 3 options, is to take a look at news for the week. Go to My FX Book, take a look at the news, and see what events are coming up, okay? And once you do that, you'll be able to say, okay, this one has, the Euro has news coming out, big news, or the Swiss has big news, or the Great British Pound, the GBP has news coming out this week. So therefore, I won't trade this one, and therefore it reduces it down. So you're just reducing your options down to the best ones. So if all of them have the same setup, which one has big news coming out this week? Well, if it does, I'm not going to trade that one. Then that tells me, okay, I'll jump in this one when the market opens at a decent price. Not as soon as the market opens on Sundays, because the spreads are way too wide. Okay, look at this spread, 10 pips, a 10 pip spread. Your money gone already. So you want to wait until the market has settled down quite a bit, and then look for great opportunities. And it doesn't have to be on a Sunday. It could be any day of the week. But what I'm saying is now you have targets. So you have a trading plan on the weekend before the market opens on which pairs you plan to take a look at, and which pairs you plan to take trades on, because you've done your work. And literally, with me doing this video, I'm still only 17 minutes in. I've already done my analysis. I'm already 17 minutes in with you guys. So and that's with talking and explaining. So just imagine you give yourself every weekend, you give yourself 30 minutes worth of work. Or you come in, you take a look, you narrow it down, you take a look and see which one has news, and whichever one doesn't, okay, I'm going to target that one, and I'll enter in as soon as on the 1 hour where I see it, the price is really pulled back or it's looking really cute. And then I'll go ahead and jump in that pair, place my stop loss, and I'm out. Okay. And then you're literally done for the week. Because look at this. This is pretty. Okay. I don't know where the market is going to open, but this is really close. See, I want it to pull back. Right here, it's a little far. Right here is great up in this area because it tightens up my stop loss. And therefore, even if it doesn't work out, no big deal. But guess what? Because it's the higher time frame, the chances of me, if I enter into 2 or 3 trades, my chances of a stop loss getting hit is minimal compared to how much, if any one of those take off, I'll be making massive pips in exchange for minimal risk. Okay. So that's the way you can do your due diligence on a Saturday or Sunday when the market is not open. Notice the other thing. I have a trading plan now. I say, okay, let's say for an example, the GBP does not have news coming out, but the Euro and the Swiss does. Okay, so now I know I may jump into the GBP. I'm looking for opportunities on that one on the 1 hour. And then I'm also looking for the NASDAQ. I'm going to jump in that one. Okay, cool. All right, I see it pull back. Great. No big news coming out. And then the Aussie 200. Okay, I like that one. Oh, my goodness. All right, look at that on the 4 hour. Ooh, that's showing downtrend. Daily, that's showing up. You got stuck right there. 1 hour showing real tight. There we go. Okay, so now I got 3 pairs. I'm going to trade the NASDAQ, the AUD 200, and then I'm going to trade the GBP JPY. Okay, or something like that. All right. Now I got my 3, or the UCAD. Now, again, you want to make sure that these don't have anything in common, okay? Nothing in common. Nothing in common. What do I mean by that? So if you're trading, now I have 4 potential great trades because the NASDAQ is the NASDAQ, okay? That's the stock. It has nothing to do with the Aussie 200, which is their form of a NASDAQ or Dow. So these two are not related. Cool. They're not related. Check, check. Good. Next, the GBP, JPY, which is an actual currency. Cool. I see that. If I like it, I'll let it play out because I really don't normally like these sideways motions, but we'll see. But either way it goes, it's not, you know, really tight stop right here. And then the USD CAD. All right. I see that one too. So now I done narrowed it down to 4 potentially great trades. Okay, 4 great trades. And guess what happens? If any one of them lose, guess what? I still got 3 more rolling and they're all at minimal risk. Great opportunity. So I just wait for the market to open for the weekend gap. They call it the weekend gap because sometimes it's the market. Just because you can't trade on the weekends doesn't mean that the market is not open to do it. Price is still moving. So you wait for the weekend to be over, the weekend gap and all this kind of stuff. And then after that, when the weekend gap is over, then what you do next is you just simply wait. Okay, wait for the market to open, see if the price is still good on the 1 hour, and then you hop in. Regardless of whether it's Sunday, Monday, or whatever, you just wait for a great time to get in at the best price, and then you just move on with your week. Okay, that's what you can do. All right, so that's this video, 21 minutes, and that's with assessments, analysis, discussions, and everything. So it took me 21 minutes to go through all these currency pairs, all of them, okay, which is about 30 something altogether. 28 currency pairs plus some indices. So therefore I did all of that plus explanation in 21 minutes. Okay. Well, going on 22 minutes. So I'm going to stop it right here. All right. So I'm going to share this video with you guys. Hopefully this helps.